Hi everyone, and welcome to another Talk with Motor Age. I am Motor Age's managing editor, Shannon Brandyberry. Today I am talking with Chris, Chubby Frederick, and Brian Stosh, both of whom are with Automotive Training Institute. We're going to talk a little bit more about the monthly Profit Matters columns that they write for our magazine. Give a little bit more information, tie it into what you guys learned in the November column about Show Me the Money, where some money that you think might be there could be hidden. So today we're going to talk to them, find a little bit more, give you some more tips about where to look for some hidden areas where the money might be tucked away in your shop and you might not realize it. So good morning, gentlemen.
Good morning, Shannon.
So Brian, we'll start here with you. We'll begin with inventory. And inventory is possibly one of the more boring aspects. People might not want to sit there and count, make sure everything's accounted for, but it is important to a shop. So can you talk about why it's important to make sure your inventory is there, you know what's there, and what you think is there is there?
Okay, you're right. Not a real sexy subject, but definitely a necessary evil, and I'm not sure if we have enough time. However, and Brian hit on, Brian Honeycutt in his article wrote about the seeing what's there. Is it more than what you had prior, previous month, previous year, whatever the case might be. It is very important. You are selling a product. If you can't manage what that product costs or measure what that costs, it's going to be tough to make a profit, let alone have any of that cash hit the checkbook. Brian mentioned about some of the lost course credits that do not make it back to an invoice. Brian mentioned things that you purchase, whatever reason, doesn't hit an invoice. It hits inventory instead, knowing that we're going to sell it sooner or later, and we all know that's not the case. But you also have to think about you're going to have increase in costs and managing inventory turns and making sure that a part you think what you paid for, the margin that you thought you had, you have. And that if a price increase from a vendor, that new price is reflected or a new cost is reflected, so you mark it up correctly for the margins. So managing inventory, and most shop owners today, not the inventory we needed back in the day, and that's really a question of what's parts availability look like. If I have parts real quick, I don't need big inventory. If parts are miles and hours away, yes, I do. But knowing what you have, knowing what it costs, knowing what you sold it for, even the bulk fluids, the bulk purchases, managing that inventory, you are selling a product. If you can't manage or measure what it cost you, you aren't going to make any money on that product.
That's a great point. A lot of people probably just think service. You know, we preach labor, pricing your labor right, but yeah, the parts, the inventory, that's important too.
And we have to, I'm sorry, I didn't mean to interrupt, but we have to, get shop owners focused on what do you have in inventory, how often do you count it, how often do you measure it. I think it's got to be kind of a small segments, daily or weekly, not wait till the end of the month or end of a quarter, whatever. You need to know.
It's a good point, and it's also easier to take smaller bites and don't eat the elephant all at once.
Thank you.
Well, okay, so let's go from inventory to your customers, and you want to take care of your good customers. You know, they come in, they're loyal. You want to make sure that you're taking care of them. But how do you walk that line between taking care of them and taking care of them at the expense of your bottom line?
Well, I'd have to make sure they know how I'm trying to take care of them.
Okay.
Your average shop owner can't play bank. They can't afford to. They can't afford to lay out money for parts and wait to hopefully get that money on a 30, 60, 90-day, whatever the case might be. So I'd want to think about how do I make sure Mr. and Mrs. Customer understand I'm taking care of them, but I still need to get paid because I want to keep taking care of you. Yeah. I'd want to make sure that I would focus on what my customers would want. Not only quality service, not fix right the first time, the convenience factors, but I'm a big believer in warranties. Go big or go home. I am taking care of you by providing huge warranties. That if you are going to buy a part from me and I'm going to ask you to pay for it, it's backed for a good long time. Making sure I buy the right product. I'd want to make sure they understand that they are going to have a very good grasp of the condition of that automobile regardless of what it is, good or bad. They have an idea of the condition. And everybody wants to use the word economy, but economy is different today. Not that it's good or bad, it's just different. and making sure that that customer has a good understanding and condition to that car, or help them make the right choices. So that's how I'm going to kind of share with them how I'm going to take care of you, not by doing this stuff for free. Because if I got to do it for free or play bank, I'm not going to be here 6 months from now, or a year from now, or 2 years from now. And if they count on me the way I think they're going to, this will be a win for both of us.
Absolutely, sounds good. Now, at the same time, while you're trying to take care of them, you know, you are in a business. You're in a business to make money. This is your living. But how do you make sure that what is at the shop, you know, in terms of personal property, you know, your car, whatever it might be, isn't too flashy? You know, you're not showing off all the latest and greatest toys that you have that will have a negative effect on your customers.
Common sense. Common sense. That's a good one. Many, many moons ago, I used to work for a gentleman several years before I came to work here with Chubby, but he would show up every Tuesday dropping off payroll in a brand new Corvette, $400 or $500 suit, couple $100 pair of shoes, and a big $25,000 Rolex on his wrist, and then he would complain he's not making enough money. Being that this is going to get other people see this, I'm not going to tell you what I told him, but I didn't believe it because he was just constantly flashing the cash. Whether it was to me, a manager, or to the technicians or employees, or even customers. I mean, come on. You're going to pull up in a nice motorhome, as Brian mentioned, and now you got customers thinking, that's what I just paid for. So I think that has to be a common sense. The toys are cool. You've earned them. The big houses and all that stuff is cool. You've worked your butt off for them, but that's kind of stuff that stays at home. Don't flash that stuff in front of your customers. And I'm sure Chubby might have a little bit of input on this because he does get a chance to talk a little bit about this with shop owners. So, Chubby,
do you have anything to add?
Well, it's tough for me because you know, collecting old muscle cars. My customers are fine with an old car that may cost $200,000-300 grand if it's 40 years old, but driving up in a new Bentley, that could probably be another deal. They probably wouldn't like. So I think it really depends upon how well you're taking care of the customers and how well you're taking care of your employees. And if you're not complaining about how much money you're making, and you're generous and you're sharing it with everybody, and your clients feel you're sharing it with everyone, then it could be a bit different. So I've heard so many arguments on this, like, well, would you rather deal with somebody who's unsuccessful, or would you rather deal with somebody who's successful? So, but I think Brian's right. You can't go in complaining and moaning about, I don't know where my cash is, I'm not making any money, and then show up and be flashing things around. So I think it really depends upon the situation that's at hand.
Great points. And you, as a shop owner, you know your customers best. So, like Brian said, just use some common sense and put yourself in their shoes. So, one last question to wrap it up. Something that people don't want to think about. It's not fun, like the fun toys, but an emergency fund. It is so important, personal life, professional life, you have an emergency fund available for the what ifs. What is a good approach to making sure you have that money stocked away, ready to go in case something happens?
All right. Well, I would start off by, savings accounts, building an account. Put X amount of dollars per week, skim it right off the top or right out of the GP dollars. That it's mandatory. Every week, every month, you're going to put X into a bank account. But what I like to tell our clients is, and this could be anywhere from a 3 to 6 month window, I'd want to have enough cash in an account that if I had to shut down business for 3 months, I could still survive. I could still pay my bills even if I did not generate $1 more in sales. And from our perspective, I mean, we see 1,250 clients every single week, every single month. And some of the tragedies that you hear, whether it's, I have one this morning, a gentleman is out riding a dirt bike, rolls a dirt bike, broke his back, he's in surgery. When do you think he's going back to that shop? Fortunately enough, he was one of the ones that took the advice. He'll probably be okay for another 2 or 3 months if the store sold nothing. But you also have to think about weather-related. And some are going to have business interruption insurance, things of that nature to support it. Most won't. But you'd have to think about, If you're not there, or if that shop did not produce one more dollar in sales, could the business survive 3 months, 6 months? Because not only you have a family at home that needs to be taken care of or relying on that income, but you also have your technicians and their families at home that some way, somehow, you have to be protected that if for whatever reason business stops, you're going to survive. And I know, Chubby, you have a few thing or two to throw in there for that one.
You have any tips?
Yeah, well, I would. My belief is you need to have at least 3 months saved up. If you had no income coming in, you could literally carry the shop and your business for 3 months, and yourself, because a lot of things happen that take us out for 3 months. So I'm just a believer in the 3 months thing. And a lot of times, we don't know where all this money's going. Another suggestion I would have is have your accountant do a cash flow statement so you can see where it is. I know over 4 years, I can't tell you how often I'll look at a P&L and go, why don't I have more cash? And I think every business owner and shop owner out there feels the same thing. I'm making all this money. I'm doing all this revenue. How come nothing's sticking? Where did it all go? And a lot of times, our accountants give us accrual statements that are hard to interpret. And some advice I may give is try a cash statement where you just look at cash, exactly what got paid, exactly what got paid out. Sometimes it's easier to run a business on a cash statement, even though most accountants would tell you it's not accurate. You need an accrual because you got to measure receivables and inventory and all that. But it gets kind of complicated. So sometimes an easy monthly cash flow statement will just show you, here's where you started, here's where it went, and here's what you ended up with. And it's pretty hard to argue against that. I know my controller does it for me every month because she knows I'm coming at her. I want to know where it went. So she usually heads me off at the pass and lets me know exactly where all the cash is moving.
Hey, Shannon, if I could throw in one last thing on this subject anyway. Both Chubby and I mentioned the savings account, the emergency fund. You mentioned the emergency fund. One thing my coaches typically do with clients, especially when we get them young, when they're new to our program, we like to do what we call a win number drill. Sure better than a break-even analysis. But anyway, these are the kind of things that we would include into that to help them determine a sales and a GP plan. And from both of those, I know my car count, I know my ARO, and then that becomes it's just part of the plan. It's driving to put that cash, or driving the plan to be able to put the cash into a savings account for that emergency fund.
All right, well then, gentlemen, thank you for those tips. Is there anything else that you would like to add about this before we wrap up?
I have one thing I'd like to add if I could. And in the article, it mentions the P&L and using the P&L to diagnose. I mean, we consider the P&L to be a tool. Most don't. Most get it, look at the bottom line, happy or sad, throw it in the garbage. It is a good tool, but I think most are looking at the wrong area. They're looking at the bottom line. Bottom line's a byproduct. Bottom line is not where you make money. You make money in the gap between gross profit dollars and fixed and op dollars. So knowing the plan and knowing what the number needs to be, your GP dollar need for your business is key. But the one thing I know Brian wanted to put into that article, that because of the number of words, along with the P&L, look at the balance sheet. The balance sheet, and Brian mentioned inventory up or down. If it's up, that's where cash went. But you also want to look at things like savings accounts. Are they up or down? If the savings account is up, that's where your cash went. You want to look at things like debt load, both short-term and long-term. They're either going to be up or down over year-end previous year. If those numbers are down, that's where your cash went because you're paying off debt. And then you also have to look at assets. Assets are going to be either up or down from end of year previous year. If those assets are up, that's where your cash went. So that the balance sheet combined with that P&L is a great tool to diagnose where money is going. So I would be looking at the savings account, I'd be looking at assets, and I'd be looking at any debt. They're either going to go up or down. For the savings account, up, there's where money went. Assets up, that's where money went. If debt is down, that's where money went. So just one thing I wanted to add there is focus on that balance sheet as well.
Good point. Chubby, do you have anything you want to add?
Yep, probably the only thing for me is at the end of the November Motor Age article, there's an attachment that they can link up and get a copy of what we call a turbo checklist. When we start off with new clients, sometimes many of them are real tight on cash and they need us to focus on cash first. So we have a checklist that's 2 pages long that I strongly recommend that you download and take a look at everything that could have an effect on your cash. And many of our clients and our coaches use it on a weekly basis, and it really does help get you focused back on where the money is.
Great. Well then, I want to thank you guys again for talking with me today about where your cash might be hidden, new ways to look for it, and some planning for the what ifs in life. So I want to thank you again for your time this month, and we look forward to talking with everyone again next time. Thanks to both of you.
Thank you, Shannon.
Thank you, Shannon.